What's he building in there? What the hell is he building in there?
It had taken Enron 16 years to go from about 10 billion of assets to 65 billion of assets. It took them 24 days to go bankrupt.
What the hell is he building in there?
This company collapsed so quickly and so entirely. I mean, it was into bankruptcy within a matter of weeks.
He's hiding something from the rest of us.
The fatal flaw at Enron, if there is one, you say it was pride. But then it was arrogance, intolerance, greed.
Come to order. This is a case of America's largest corporate bankruptcy. The question here is what happened, who was responsible for it happening, and what can we do to prevent this sort of thing from happening again?
I think the Enron story is so fascinating because people perceive it as a story that's about numbers, that it's somehow about all these complicated transactions. But in reality, it's a story about people, and it's really a human tragedy.
Pockets don't ever make the grade. Mama may have, Papa may have, but God bless the child that's got his own, that's got his own. Money, you got lots of friends crowding round the door. When you're gone and spending ends.
On this date at 2:23 a.m., Sugar Land Police discovered John C. Baxter located inside his vehicle with an apparent gunshot wound to the head. At this time, there has been a suicide note located.
Sort of, can you give us any indication whether this was related to Enron's bankruptcy?
We do know that he was an Enron employee, but as far as any other indications of why he committed suicide, no, we do not.
You don't believe that the press and everybody calling Cliff Baxter or yourself or anybody on the board of directors denigrating or tainting you, you don't think it's accurate. It's what you're saying to us here today.
I do not believe I did not do anything wrong that was not in the interest, and all the time that I worked for Enron Corporation, that was in the interest of the shareholders of the company.
Ultimately, who was responsible for the downfall of Enron? Only a few years ago, Enron was the nation's 7th largest corporation, valued at almost $70 billion. Pundits praised the company as a new business model. This trading floor was manned by America's best and brightest, charting the futures of energy and power. And high above each with a private staircase, Ken Lay and Jeff Skilling had built their own plush staterooms. They were known as the smartest guys in the room, captains of a ship too powerful to ever go down.
In the Titanic, the captain went down with the ship. In Enron, it looks to me like the captain first gave himself and some friends a bonus, then lowered himself and the top folks down in the lifeboat, and then hollered up and said, by the way, everything's going to be just fine.
Will. This is the shredded evidence that we got that came out of Enron.
We very quickly determined that the insiders had sold off $1 billion of their stock in the preceding several months.
Did you convert stock worth $66 million?
I don't know, but I don't have the records with me. Would that be
surprising to you to learn that you did that?
No, that would not be surprising.
Mr. Fasto got only $30 million in stock proceeds from Enron, but he took another $30 million out with his side deals.
I think there was just an immediate sense of outrage at Lay and Skilling and Fastow when people realized how much they had profited and how completely artificial the appearance of this company had been.
News of shredding at Enron raised more questions. What answers were lost in the torn documents? 20,000 employees had lost their jobs. $2 billion in pensions and retirement funds had disappeared. Was Enron the work of a few bad men or the dark shadow of the American dream? Jeff Skilling's biggest single idea was to find a new way to deliver energy. Rather than be bound by the physical flow of the pipeline, Enron would become a kind of stock market for natural gas. It was a magical new idea. Transform energy into financial instruments that could be traded like stocks and bonds.
Jeff was like the prophet. He came in and said, there's a whole new world out there. Forget about this pipeline stuff, you know, the stayed pipeline in the ground and gas in and gas out. We can recreate this entire industry.
Skilling saw the opportunity to build an industry new and to start a business from scratch. But he had one specific condition that had to be met before he'd join Enron, and it was that he'd be allowed to use a certain kind of accounting known as mark-to-market. Arthur Andersen signed off, and the SEC approved it.
Mark-to-market accounting allowed Enron to book potential future profits on the very day a deal was signed. No matter how little cash actually came in the door, to the outside world, Enron's profits could be whatever Enron said they were.
Very subjective. And very, it left it open to manipulation.
$8 million on new deals.
At Enron, no one was more aggressive than the traders.
$4.5 million.
On the trading side, we got to be the biggest, baddest house in town. And by necessity, if you wanted to be in the market, you had to deal with Enron.
The Dow rose at nearly 61 points.
This company was fixated on its stock price and fixated on a massive public relations campaign to convince the investment community that they were new, different, innovative, almost heralding a new era of corporate enterprise.
Enron Online, a fabulous, fabulous story. Probably put on.
They were so good at their acting that they convinced corporate America that they were smarter than anyone else.
In fact, to get to those numbers, Enron was doing all sorts of questionable things, taking enormous risks.
We like risk because you make money by taking risk.
New things can be tough, gotta move. Do what you wanna do. Who to tell you not to?
By all accounts, Enron was soaring.
No matter who you are, no matter who you be.
But in reality, profits weren't going up. They were headed in the opposite direction. Enron had vast natural gas operations all over the world. They had cost billions to build, and most were performing terribly.
But in other places in the world, in India, great quarter and great year in India. Phase 1 of the bowl is in operation, generating power. Phase 2 is financed and is under construction.
But Enron had failed to see something basic. India couldn't afford to pay for the power Enron's plant produced. Now, Dabhol is a ruin. Though it lost $1 billion on the project, Enron paid out multi-million-dollar bonuses to executives based on imaginary profits that never arrived. Where was the real money going to come from?
Enron is a big winner today.
One of the things that fascinated me was that almost all of the Wall Street analysts who covered Enron had buy ratings or strong buy ratings on the company's stock.
Why were the analysts blinded to the company's deceit?
We relied on the information that was available at the time.
I trusted the integrity of the company's certified financial statements and the representations of the company's management.
By giving Jeff a call, the analysts weren't analyzing at all. They were willing to believe virtually anything Enron told them. Any analyst who didn't buy the company line became an enemy of Enron. Enron's CFO, Andy Fastow, had his eye on John Olson, one of the only analysts skeptical of the Enron story.
Enron loved analyst strong buy recommendations.
Merrill was informed by Fastow, either you get somebody who is on board with us and has a strong buy recommendation and loves us at the same time, or we don't do any business with you. I knew that my days were numbered.
This is an abuse.
Merrill Lynch fired John Olson. Soon after, Fastow rewarded the bank with 2 investment banking jobs worth $50 million.
Analysts were routinely getting large bonuses from the investment banking departments to bring in investment banking deals. Once that happens, never was heard a discouraging word.
While Enron's stock kept rising, its businesses kept losing money. Looking at the soaring stocks of the dot-coms, Skilling decided to take Enron into cyberspace.
Just last week, Enron captivated Wall Street with its bold move into broadband, teaming up with Blockbuster to deliver movies on demand.
The technology didn't work, and the deal with Blockbuster soon collapsed. But with the magic of mark-to-market, Enron used future projections to book $53 million in earnings on a deal that didn't make a penny. The executives started selling their stock. By Enron's collapse, Ken Rice had sold $53 million. Ken Lay had sold $300 million. Cliff Baxter, $35 million. Jeff Skilling, $200 million.